Welcome. First of all, let's look at price action before going to the fundamentals. So one, for price action, we're overly bearish. We're in seller's territory. This particular bearish dump here, or this drop, was based on the tentative Bank of England interest rate. Though it did not really change. It's still 0.1%, negative 0.1%. However, for yen, sorry, Bank of Japan interest rate. So it was still left at negative 0.1% because I know in Bank of England will never give 0.1, the central bank will never give 0.1 negative. Okay. So looking at this, well, I can't say never. So get back to the point. I was looking at, okay, this is seller's territory. Definitely when once price drops, what is programmed by the algorithm is for price to retrace, show some weakness in the retracement, retest of the low. This is normal theory. Everyone knows about it. But the problem is how to apply that theory to turn that perception into actualization, which is turning your thoughts into money. So looking at this, looked I was of the opinion that price would continue the bearish momentum. So I there was a forecast that was done here. There was a forecast that was done here. Now, if you look at this very closely, I'm going to give the theory and play it out to see what I mean. Once price dropped, you see how the price dropped. You see the retracement strong, okay? However, not as strong as this. What I normally tell those who are learning, one has to gauge the momentum. Trading is very easy. However, what complicates or makes it difficult is applying or combining all the theories, forming a very strong experience, and over time you build a strong skill plus the experience, it becomes interesting and easy. Now, this is what I mean. Price retraced, however, the retracement wasn't as strong as this drop. So this is the base, this is a drop, this is the area or the point where price started reversing. So this is an area we expect some big boys waiting to bounce the sellers coming down, unless the sellers are stronger than the buyers. Now, this weakness in price you see here are the big boys loading up their orders, or in other words, their pending orders that were placed within from this low horizontal point to this upper horizontal point. Okay, their orders were being digested, and whenever you see price give this kind of very weak movement like this, you know that there is a fight between the bulls and the bears. In other words, the buyers are trying to push price up, whilst the sellers are also trying to do what? Hit price down. Now, most people will call this a channel. Okay, most people will call this a channel. However, this is one thing you know. Everything in trading is channels. Though if I say this, some people will say, come on, man, what are you trying to say? Don't deceive people. But that is the fact. A trending market is a channel sloping down. A ranging market is a sideways channel. A bullish market is an upward channel. Whichever way you look at it, just to make it easier for people to understand or digest. Don't cram anything. Patterns should not be crammed. Understand the first principles, then you understand how to break down the structures. Why did someone say that if price, for instance, is coming down and you get something like this, because you will see some people do something like this? Why is it that when price does like this, the next thing you notice will be continuation of the bearish swing? And some will say because market is coming down like this, right? Good. However, look at it again. What is price telling us within this congestion? Now, this is the congestion I'm talking about. To keep this very short and simple and straight to the point, this is the reaction that got, which meant that the bears overpowered the bulls. Now, this is where my TP, I'm expecting my TP to hit. But remember, whenever TP is not struck and price retraces, it comes back to the area where price, your initial point where I'm looking at price to start dumping from. If I play this now, you discover that price would retrace to this point. However, I noticed that in this particular price action, let me clean this. In this particular price action, there are two areas person can take sell. One is this early entry here. Second is this entry here. And these two entries are conservative entries. I don't take aggressive entries, purely conservative entries. So this is one entry, this is second entry. Price comes here. If the price again fails to hit TP, it will do what? Retrace to this point before doing what? Dumping to TP. If it fails again, then that's will call for attention. Most times, price will react, come back to react from here during either London Open, New York Open, London Close, Asian Open, New York Close, things like that. Those areas of what? Confluence. This, if this does not drop around this particular session, it retraces. When there is New York Open, it drops. If it fails to hit the TP, it retraces. And when there is London Close or New London Open, or whenever there is an open or close of any session, there is what? Volume coming into the market. Now let's look at this. If I play this right now, let's see what price will do. Beautiful. You see what I'm talking about? Price failed to hit the TP, retraced to this point, okay, and did what? Dropped. However, failed again to hit TP, retraced to this point. Okay, now let's go to the live chart. Let me show you what I mean in those points I'm talking about. Um, Drop down to the 1 hour time frame. Okay, and let's look at this clearly. Okay, now let's play this game together. What time is this? This is 9 o'clock. Look down here. This is 9 o'clock candle. This is 9 o'clock candle. And what is 9 o'clock? 9 o'clock, from 8 o'clock here, you go to 9 o'clock. We are going to what? Pre-New York Stock Exchange. Okay? Pre-New York Stock Exchange. And 9 o'clock most times is the open of a new 4 hour candle. Don't forget. It's the open of a new 4 hour candle. What is this here? 3 o'clock today. This is London Open. What did you notice? During time of open or close, there is increase in volume. So you don't even need the volume indicator to tell you, okay, this is, you see my chart is without any indicator, without any, I don't even use those stuff because they lag and it's just like what Raja Bank would say. Why would you need to tell the percentage of a pie chart when you could actually look at it and tell, okay, this is bigger than that? So in a nutshell, it failed to hit TP, which is our potential TP, retraced. New York Stock Exchange, pre-New York Stock Exchange open and the open of a new 4 hour candle, price dropped. However, failed to hit TP, retraced to this point, and this is what? London open. Then we had a what? A bearish drop. If you look at this, smack it directly, you go up here, the same thing occurs. So these points are areas of what? Confluence 1 to 1, 2 to 2. Now, this is another thing I was talking about earlier with the team. Price has broken this low, okay? It closed below it. You wait for retracement and you anticipate price to continue dropping. However, taking this sell here will be aggressive because you're taking sell on the 1 hour, which is approaching the close of a 4 hour candle. We have just 45 minutes for this 4 hour candle to close. So it's better to wait for the 4 hour candle to close and you take it during the what? New 4 hour candle open. Or you drop down to lower time frames in order to see clearer price action. Okay, though I don't normally drop down to lower time frame because for when I'm training, because lower time frame takes a different kind of rhythm and is faster than the higher time frame. Okay, it gives a lot of price action. Like if you check here, the rhythm here What is this telling me? Looking at this in a nutshell, I would say that price has done what? There's a break or change in character, like he said now by the new traders. There's a change in character. So two things can occur. A break of this low we anticipate will make us to anticipate more further bearish momentum, or we anticipate what? Bullish momentum if price breaks this high. Okay, so this range now is a range that someone should just not trade in. So this from here to here is a no trade range, NTR is a no trade range. So below here we anticipate more bearish momentum. Above here we anticipate more bullish momentum. So the quiz I will ask you is, which do you think will overpower? Of course, it's the sellers. And as you can see how price is dumping, it's the sellers, of course, because we're in sellers territory. What we just got here, this range is big boys placing more orders. Those who had their stop loss here and are taking buy because of you know what they normally say, support one, support two, which is like S1, S2, which is support one, S1, S2. Some people have already taken buys to go up because, like you want to say, double top, double bottom. But you don't do double bottom or double top. You have to gauge momentum. So I'm going to stop here for now, and let's see how price will play out. However, my suggestion is, if you're watching this, the recording, if you're not live here, please, if you ask me, I would say don't take the sell yet, because I would prefer for this 1 hour candle to close and the next 4 hour candle to open. Okay, once the next 4 hour candle has opened, I want to see some retracement. Okay, don't forget that this 1 hour candle, first of all, doesn't have any top wick. I want to see some retracement, preferably within this zone. Excuse me, within this zone, some retracement, then see if we can continue the bearish swing. As we look at it now, we're still in sellers territory on the 1 hour time frame, sellers territory on the 4 hours time frame, sellers territory on the daily time frame. In fact, this is a sellers dominated market. So I'm going to stop here for now, and thank you for your time. Do well to subscribe, like, hit that notification bell so that you will be notified. And happy holidays. Peace. Barakabashad.